This week was a masterclass in market makers keeping traders on their toes. We went from a weekend trap and rise level 1 to Asia finally taking control and running a trend to a midweek liquidity grab that punished anyone chasing and then capped it all off with Friday's dead gap zone move and extension into the weekend. Every day told a different story. Session roles flipped, levels were built and then swept, and opportunities came only to those who stayed patient. At the same time, our community was buzzing. Annie's 90-day lock-in challenge has ignited a wave of discipline inside TTC, and the wins are already rolling in. Hi, my name is Janet and this is Trade Travel Chill. If you're new here, welcome. If you're returning, welcome back. Be sure to hit the like and subscribe button so you can be notified every time I upload a new video. In this wrap up, we'll break down BTC's price action day by day using the TBD system, show you how the crew navigated the traps, and highlight some of the moves and lessons you can carry into next week. Let's get into it. Back to where we left off from last week's price action, the weekend trap. You can see we had a typical weekend trap where price just consolidated, with open interest being flat whilst price is in consolidation. This means everyone has gotten smarter, no one's really taking any trades, whether that be long or short. So market maker needs to drive price out of the range in order to get retail to open new positions. We can see that Asia gave us an entry holding the EMAs beautifully and setting the initial low of the day, confirming that this was our rise level 1. We can see the volume through the 50 EMA. Asia then gave you the higher low, confirming this W formation that formed over the weekend. Then UK gave us a beautiful trend, typical behavior, giving us a rise level 2 for the 15-minute time frame. What really stood out on Monday was how aligned the cabin crew were. NJ nailed his TA early, calling for that move up, and at the same time, Cajun Spice was seeing the identical setup and posted an early idea for the community, 5-minute scalp long with clear confluence. So if we look at NJ's chart, we can see that he was looking for a dip into the unrecovered blue vector candle before making a run into the 112k range. So we can see that price did dip perfectly into his area of interest at the Asia Open and made a run into his target of 112k range. Then we move to the UK session, remembering that we have 3 live calls per day at the start of Asia, UK and US session, so all of our community know what to look for heading into the next session. So here we have Cajun Spice. He put out a 5-minute scalp idea, ideally a break close retest of the initial high of the day, his target 113k. Based off his idea, he was looking for price to break the Asia initial high of the day, which we got early in the UK session, for price to then come back, create a higher low and give us an entry. So here we can see our bullish candlestick pattern. That would have been your entry, stop loss to cover previous market structure and the EMAs. So this is the 113k region. You can see price didn't make it there before price then made a full reversal back to entry. However, if you had taken this trade, you would have been running your stop loss up under previous market structure and securing profits along the way, as it was intended as a scalp. So worst case scenario, this trade would have got closed out at a 3-to-1, depending how you managed it. This type of alignment across the team is exactly what gives TTC members an edge. On the macro side, Jarrid dropped a powerful blog titled Cracks in the Labour Market, Why Payrolls Are Flashing Red Across North America. He explains how after 4 months of disappointing payroll numbers in the US and Canada, the story of a resilient labour market is falling apart. June's report initially looked solid, but revisions turned it into a negative. August came in below expectations and will likely be revised down as well, and full-time jobs are being replaced by part-time work, while hours worked slide to recessionary levels. Participation is falling, shadow unemployment is rising, and Canada is experiencing its steepest 2-month job loss since 2021. Even though central banks have been insisting everything is strong, the data and markets are telling a different story. Yields are dropping, the curve is steepening, SOFR futures and swaps are shifting, and traders are starting to price in aggressive rate cuts. This isn't panic bait, it's the anatomy of a slowdown playing out in real time, and it's exactly the kind of backdrop that creates the engineered volatility we trade within the TBD system. To round out Monday, Pedro released a new video on digital asset treasuries, or DAX. which are public companies that raise capital to buy and hold Bitcoin so investors can get exposure without buying BTC directly. He breaks down not just why these structures attract investors, but also the risk they carry. And that's important for us as traders because these entities can quietly become either strong sources of demand or forced sellers, influencing supply and price action in ways that aren't obvious from spot charts alone. So Monday wasn't just about a rise level 2 on the chart. On the lower time frames, we had a clean technical setup with multiple crew members seeing the same thing. And at the same time, Jarrid was putting out a macro warning about where the broader economy might be heading over the next several months. That's not something that will affect our 15-minute setups right now, but it's a reminder to keep an eye on the bigger picture as it develops. Tuesday was where the session behaviour really shifted. Asia took the reins and ran a trend that delivered rise level 3 straight into the high of the week, which is the highest point price went to the previous week, effectively completing our rise level 3 for the 1 hour time frame. So if you remember from last week's weekly wrap-up video, we talked about the 3 hits to the low of the week reversal pattern, and I only had 2 rise levels in for the 1 hour time frame. This move here out of the weekend trap and Monday, Tuesday, in my opinion, gave us a sideways rise level 3 for the 1 hour time frame. Now we can see the model is really starting to feed up into the higher time frames. I'd been giving the community the heads up over the last few weeks that Asia could start running a trend and to stay sharp for it, especially with news events and bank holidays on the horizon. And this was the first real example of that playing out. From there, UK did Asia's usual job of consolidating before the US session came in and reversed it. This was a classic example of how session roles can swap, trapping anyone expecting the usual rhythm. While all of this was unfolding, Annie dropped a YouTube video titled The GridBot Trading Method No One Teaches. In it, she talks about how learning to trade takes patience in a world that's anything but patient. Most traders come in expecting fast money until they're deep enough to see how much discipline is actually required. She uses GridBots to illustrate a way of stepping off the hamster wheel, showing how instead of panicking about catching the perfect entry at the pivot lows, you can use GridBot to harvest 2 streams of profit from the same market volatility. For anyone watching current price action and feeling like they've missed the move, Annie's point really landed. The market will always offer traps, reversal and extension, and you don't have to force a perfect manual entry to benefit. GridBots can run quietly in the background while you focus on your learning and your main setup. So Tuesday gave us the completion of the 1 hour rise level 3, a session roll reversal between Asia and UK, and a timely reminder from Annie's video that patience and systems matter more than trying to snipe every pivot by hand. Wednesday opened with BTC printing a multi-session, multi-day W. That pattern set the stage for a brand new sequence of impulsive rise levels on the 15-minute time frame, giving us a rise level 1 and 2. And importantly, a clean break of our key level, the high of the week. In Discord, an interesting conversation happened that underscored just how much the market is changing beneath the surface. Pete asked Jarrid about a live statement from Anton Kobikov suggesting the US plan to move its debt into crypto stablecoins, devalue it over time, and essentially inflate away obligations. Jarrid explained why that claim doesn't actually make sense. You can't just move US debt into stablecoins, but you can create stablecoins that buy US debt as collateral. Inflation, he reminded everyone, is structurally built into fiat systems by design. The dollar is meant to be inflated by 3% annually to keep the debt engine running. He went on to say that US government debt isn't the main issue right now, especially after the Genius Act. Instead, the rise of regulated stablecoins is likely the first stage of a financial currency evolution that could reshape how people transact globally. Initially, this probably means stronger demand for US-backed stablecoins, especially in emerging markets, which strengthen the dollar. But it also raises questions. Will non-US countries accelerate their own CBDs to defend monetary sovereignty? Could that lead FX market volatility? And how will rules about whether stablecoins can pass through interest income affect which ones win adoption? It was one of those conversations that makes you step back from the 15-minute chart and realize the plumbing of the entire system is shifting beneath our feet. At the same time, Pedro released a new video titled Why Nobody's Prepared for Crypto's Next 48 Hours. He goes over how past PPI news events have shaped price, notes that this time we don't yet have a clear trend, and says he isn't afraid of a recession. He actually welcomes it. He also lays out why Q4 could be good for altcoins. Then he goes through the BTC chart, talks about security and the importance of a cold wallet, touches on the Doge ETF, and shares insights on XRP's partnership with BBVA. It's a wide-ranging breakdown, but the common thread is preparation, understanding how macro news and new products can shift flows and why you need to secure your assets before the volatility hits. So Wednesday gave us a fresh W and new rise levels on the 15-minute chart, an eye-opening discussion about the deeper implications of stablecoins, and Pedro's timely reminder that even when the headlines are noisy, being prepared beats being surprised. If you need an exchange to trade on, consider checking out WEEX. Even if you already have a go-to platform, it never hurts to have multiple exchanges. Because think about it, what happens if you're in a trade, you haven't had the chance to move your stop loss into profit or take partial, and suddenly the exchange goes offline? It's rare, but it happens, and if your risk is spread across 2 to 3 platforms, it's very unlikely that they all go down at the same time. This can happen when there is major market volatility and all of a sudden you see big red candles and everyone is trying to access their trades to open, close positions, etc., and the exchanges just get overloaded. That's one of the reasons I like WEEX. On top of its clean layout, it also gives you the ability to open multiple positions on the same asset in the same direction without merging them. That way you can manage each position separately, no averaged entries, no confusion. If you want to try it out, I've left the link below. Using it gets you VIP 2 level straight away, which is the equivalent to a 25% discount on fees. And if you're new to the platform, I've uploaded a full WEEX tutorial on TTC YouTube channel that walked you through everything, spot, futures, all of it. Thursday was one of those days where patience was really tested. After a week of trending higher, we spent the whole day consolidating, sitting in a holding pattern where many of us were expecting rise level 3 to complete here on the 15-minute time frame. On paper, everything looked primed. We'd already had 2 strong rises and it felt like a midweek reversal or a clean level 3 was inevitable. But instead of delivering that, the market just churned, showing a burst of volatility around the UK to US changeover at the news event and then settling back into the range. The high of the week held solid and no clear level 3 emerged. Instead of the clean level 3 we were anticipating, what we actually got was a classic Asia liquidity grab setup. In this pattern, the UK session first spikes the initial high or low of the day to clear liquidity, then quickly sweeps the opposite side of Asia's range before price drifts back inside. So let's walk through that. We first want to find Asia's initial high and low of the day. So this point here is Asia's initial high of the day, and this is Asia's initial low of the day. What happens is liquidity starts to build outside of the Asia ranges from those who have entered positions during Asia. Come the UK or US session, what you'll find is they'll spike the liquidity that has built outside of the Asia range, whether that be the low or the high. Provided you get an entry on the lower time frame, you can then trade that back to the liquidity on the other side of the Asia range. So we can see here that at the news event, price came back, took Asia's low liquidity, then went for the liquidity above the Asia high. From there, this setup is complete and you would then wait for something clearer to present for a new entry. So although price consolidated over Thursday, there were still opportunities present if you knew what to look for. With that, the setup was complete, trade executed, targets hit, and price slipped back into the range. That's exactly the theme Annie tackled in her YouTube video titled My Exact Altcoin Entry Strategy After Today's CPI. She explains why the big money often leaves major liquidity behind on days like this and why you have to be cautious around it. She talks through how she's managing her trades, the possibility of an extension when level 3 hasn't hit its target, and how the market makers will sometimes tie that extension to a news event if they haven't trapped enough liquidity. She follows up on all the altcoins she's been sharing both on YouTube and with the community, showing what to look for next if you miss the aggressive entries. It's a great example of taking the same patience we needed on Thursday's BTC chart and applying it to the alt setup, understanding that a fake out or an extension can be part of the plan rather than a surprise. So Thursday gave us consolidation instead of a clean level 3 we were expecting, and at the same time a timely reminder from Annie that managing patience and setups, especially around major news events, is just as important as spotting the perfect entry. From there, Friday opened with energy. The dead gap zone move fired off, completing our rise level 3 here on the 15-minute time frame. We even got a brief extension, trapping late long, before the US session then pulled back against the move, trapping late long right into the weekend. If there's one thing to take away from all of these videos that we have shared here on the TTC channel, it should be that you don't have to sit here watching the charts 24 hours a day, 7 days a week. You can time when these moves are going to happen, and you can take the weekends off, because more often than not, price just goes sideways with low volume by design. While this was happening, Annie went live to share her thoughts on how to handle BTC going into a Friday close. She gave her usual weekend trading tip, walked through the Asia liquidity trading strategy, and then broke down the dominances, explaining why altcoins were flying compared to BTC. She took viewers through Litecoin, Sol, and XRP, and wrapped up with an advanced tip on how to chart your alts against BTC to spot higher probability entries. It was exactly the kind of prep you want before heading into a weekend where traps are common. Meanwhile, in Discord, Kevin asked Jarrid to walk him through scenarios for the Fed's decision on the 17th. Jarrid explained that the market is at a critical shift in mindset. With the US labour market deteriorating and inflation flat in the 2 to 3% range, there's a risk that the old bad news equals good news dynamic flips to bad news equals bad news, essentially a risk-off environment. He pointed out that the market is already pricing in a 25 basis point cut at 93% odd, and how assets react will depend heavily on Powell's messaging about the future path of cuts. A 50 BPS cut, he said, would likely spook markets because it signals the Fed is more worried than they've admitted. Holding rates steady is extremely unlikely, but would also probably trigger a negative reaction, as it would mean higher for longer just as the labour market continues to weaken. So by Friday, we'd completed our rise level 3 and extension. Alts were outperforming and getting their own setup, and behind the scenes, Jarrid was outlining how the next big macro decision could shift the tone of risk markets. It's a good reminder that even on a lower time frame, the weekend traps are nested inside bigger policy expectations that can shape the next move. Alongside everything we've been seeing on the chart, something really exciting has been building inside the community. Annie has lit a fire under TTC with her 90-day lock-in challenge, and the energy is unreal. She's opened a brand new 5k account, risking $50 per trade, to see what she can grow it into by year's end, and she's invited everyone to lock in alongside her. Traders across the community have spun up fresh accounts on their exchange of choice, separated from their day-to-day trading, and are committing to their own rules and setup. This isn't about who racks up the biggest P&L, it's about discipline, consistency, and proving to yourself what's possible when you focus. Now let's take a look at some of the wins coming in from traders who've locked in and are already putting this challenge into action. We've got Cryptones bagging 38% on a BTC short. We've got AV taking a setup from what Energy mentioned with a long on BTC, as well as Bowgirl taking advantage of that, gaining 7%. We've also got Cajun Spice giving entries on Link. We've got Anna using WEEX, grabbing 132% on a altcoin long. And Stella, with her best trade so far, based off her own TA, marked out her own areas of interest where possible retests might happen, and grabbing herself 121% on Sol. And last but not least, we have Reza slaying the market across multiple assets: BTC, Doge, PIF, Tengu and Link, massive P&Ls here, a nice one Reza. Everything you've seen in this breakdown, from the early Asia trend call, the liquidity grabs, the patience around fake out, is exactly what we teach here in Trade Travel Chill. It's not a scattered collection of tips, it's one clear playbook built around the TBD system. Inside TTC, you'll master the reversal pattern, the intraday sell and session behaviors that give you an edge before the move starts. You're not just learning from videos, you're trading alongside a community of disciplined traders inside Discord who are reading the same levels and sharing real-time insights. We've also made it easy to dip your toes in. If for some reason you do not find value in your membership, there is a 48-hour money-back guarantee. To check it out, use the link in the description below. As you head into next week's charts, remember the edge isn't in trying to catch every candle, it's in recognizing which stage the move is in and waiting for your confirmation. That mindset alone filters out a lot of bad trades and builds your confidence. If you'd like to see these concepts applied live and trade alongside a community doing the same thing day in and day out, the TTC membership links are below. Pick the path that fits where you're at and start building your edge with us. And stay tuned for Annie's upcoming video where she'll be sharing her insights on where price may be heading next.